Hey everyone, my name's Adam Mishan, and if you've clicked on this video, I assume you have a basic understanding of what forex is. Forex stands for foreign exchange, and essentially what we're doing is trading currencies. And that is what we're going to be tackling in this video, trying to see what happens. Now, the forex space is littered with tons of people claiming to know how to teach you to make $10,000 a week in forex trading. Are their claims legit? Like, can you really make money with forex trading? Or is it a pipe dream that is meant to just suck up everybody's money? So in this video, we're on a mission to show if certain methods in forex trading can produce consistent results that can actually make people money, and it's not just pure gambling. That's what we really want to answer. Now, what really piqued my interest in this topic was a video done by Biaheza where he takes a week and tries forex. What was interesting about his video is that he tries a specific method called scalping, but then at certain spots starts to just put money in at random and play around in the market. It didn't seem like there was a clear path that he was sticking towards and following 100%, which totally makes sense because he's a total beginner at forex trading, giving it a try for the first time. So he was bound to move around a little bit in his approach.
There's people out there who say there are patterns and indicators in the actual graphs themselves.
So in this video, my dad and I are going to go through 5 days of trading, and we're going to see if we use the scalping method, if that's going to produce consistent returns for us. Now, I know a week is not a ton of time to fully prove any one method, right? But it will give us a glimpse into this scalping method. So now, without further ado, let's jump straight into the trading. All right, so we just finished day one of trading, and it wasn't the most exciting day of trading because we were just starting off with a very small account, trying to get our feet wet with forex trading, as this is really brand new to us. So we started off and we were looking for the indicators that they talk about with scalping. That's the method that we're trying. So we really wanted to stick to that method. We found those and we sat around for a couple hours waiting to find those indicators. We found those indicators. And when they popped up, we jumped in. Now, when we jumped in, we already started at a loss because they actually take a fee, which is called the spread between where you buy and what actually your money ends up in the account as, or in the play as, was already down $2.70. So it's not a massive amount because, again, we're trying to lower our risk right at the beginning. We're going to be playing with a little bit bigger numbers as we go along, and as we add money to the account, we're going to add a little bit more. So right now we're at $500 in the account, and it was a short play, so we were trying to bet against the pair that we were betting against. Is USD and CAD. And what ended up happening was we set a stop loss. That's always a smart thing to do, is set stop losses where, you know, if you hit that spot, you want it to automatically trigger you out. So if you're not paying attention the entire time, you won't lose all your money and blow out your account. So we hit that stop loss, $10, we were minus $10, and it didn't prove the theory. So this is number one piece of evidence that's against the theory that we were subscribing to, the scalping method. And let's see how the next days go. All right, so we just finished day 2 of trading, and here there were a lot more opportunities to get in and out of the market very quickly with nice indicators that really showed us where the trend of the market was going. My dad also was looking at news about certain things that were helping us find additional triggers that could potentially lead us to where the market is going, and we really secured a nice bit of profit. So if you remember, yesterday we lost about $10 because we got stop lossed out on the one trade that we did. Today we did 5 trades. Each one was in the plus. We were in the money. So we almost made our money back. Each one was about $2 to $1, $1.50, like in that area. So it's not super exciting, and it's very easy to keep your cool when it's this low of a money. Like, you're really not dealing with massive bucks here. It was very easy to stay relaxed and not do any impulsive sort of trades. And that's what we were trying to stick to. We're trying to stick to the method because we wanted to really give you guys a clear indicator of what this method can do. If you apply it 100% of the time, what gains can you potentially expect based on the way that you're trading? So that is what happened today. Let's jump in tomorrow. I think we're feeling much more confident to now up the risk level. So we've been playing with 5% risk. Now we're going to try to up it to about 25% risk, just for the purposes of creating a little bit more excitement in this video, because this is a challenge. We really want to show you guys, if you have a lot of money on the line, how are you going to act? So let's see how that goes. All right, so we just finished day 3 of trading. Wow, my nerves are shot. That is so hard to keep your cool when you're putting this much money on the line. So we funded a little bit more into the account. We actually switched brokerages. This one had a much smaller spread so that we weren't getting as much of a fee taken off, and it allowed us to trade with much higher risk. So we traded at a higher risk. 25% of our account was at risk. And we jumped into this trade at a higher lot, and it did not go for us. We did 2 trades total today. The first one, we got our stop loss triggered at $300, knocked us out. Wow, that was like, all the indicators were showing that according to the scalping method, that it should have gone down, but it just literally skyrocketed. And that's just the way the market is. Sometimes you hit it, sometimes not so much. And this was a not so much. Then the second trade, we hit all the right indicators, and it ended up swinging to the wrong way, and it wasn't much of a loss. Like, it would, at a certain point we were down $200, but then we got down to -40 and we jumped out. Because one of the things that I'm learning here is that it's very hard to know when exactly to jump out, right? Like, all the indicators for going in are there, but when to take profit is a difficult choice to make, even when you're in the green. But I mean, here today we weren't even in the green at all. So let's see how tomorrow goes and if we can recuperate any of that lost money. Let's check it out. All right, so we just finished day 4 of trading. This was a crazy day. I can't tell you. My nerves are shot right now. This was probably the craziest day of trading so far. We're playing with big lots here that could potentially blow out our account, and we didn't come close to blowing out our account, thankfully, but there were some spots where it got really, really hairy. So let's talk a little bit about the trade. So we executed 6 trades this time. The very first one, we were actually up. We got up about $100. We were up a little bit more, but we didn't close out the trade quick enough. Then we had one that we just ended up at 0 because it was jumping around like crazy. We got back to 0 and we're just like, okay, we're going to get out. Then there was the next trade where we were up a little bit, like $20, $30. The next trade we were up around $100. The final trade we were up around $200. All in all, a really good trading day. We made quite a bit of money. So if we could potentially do this type of thing, obviously at a lower risk, because we're playing with really high risk for the purposes of this experiment in particular. But if we could play with lower risk, but with these types of returns, that would truly prove the effectiveness of this strategy and how this could potentially be a way to make serious money on a regular basis. So let's see how the rest of the trading goes. We got 2 more days left. We'll see you there. All right, so we just wrapped up our final day of trading, and what a day it has been. This one was crazy. We entered a trade with all the right indicators, and it ended up turning the opposite way. We ended up down almost $1,000, very, very close to blowing out our account completely. But eventually we literally just stayed in this one trade all day long. Eventually it rallied. We got back up to close to par. Not quite. We had to pull out around $150. It was a choice we had to make, and it seemed to be the one that was right. And then unfortunately, due to all the emotion wrapped up in that day of trading, or sitting in a trade for a really long time, my dad re-entered the market, and it was just an impulse buy, and it ended up going into the negative. There were no signals, just kind of bought in without really having some sort of plan. And that was the reason for that. So we were only down about $24 from that. But overall, we're in the minus for today. All right, so 5 days of trading are done. Let's break it down. Where are we at? Are we in the plus? Are we in the minus? Drum roll, please. You might have already put it together. we're in the plus. We're up $206 overall, which is pretty awesome. However, there are a couple of caveats I need to mention. Number one, we switched brokers at day 3. So day 1 and 2 were with one broker that had a really big spread. So it was very hard to really make money with that broker. When we switched over to that other broker, it was a much shorter spread, so it was much easier to make money. In addition to switching brokers, we also switched our level of risk. So we over leveraged the account a little bit too much. We definitely would not do this in real life. So these would be much more modest returns had we not leveraged as much as we did. Also, when we switched brokers, we added $500 to the account, bringing the total account value on day 3 to $1,000. So we started with 500. We basically traded to even with broker number 1, and then we added 500, so we were at 1,000 to trade with when we started day 3. So let's bring it full circle. Did we prove that these methods actually have validity and can really be something that can produce positive returns? Well, in my personal opinion, this is not a scientific experiment, so there wasn't enough evidence here to actually prove the theory. But in my personal opinion, I think if you do this smartly, minimizing your risk, I genuinely believe that this could be a legitimate way of making money that is greater than chance alone. So it's not the same as throwing your money all on red or black on the roulette table. It's not like going to a casino and gambling. It is a little bit more skill-based than that if you apply the right skills. If you just throw your money into the account randomly and haphazardly, then yes, it is pure gambling. But if done with a method and you stick true to that method, then you could be very successful. That leads me to the next thing that I learned through this experiment. You really need to be in complete control of your emotions as you're trading. Trading is very anxiety provoking, especially if you're doing small scalping throughout the day where you need to jump in and out of trades. And if the trades don't go your way, and depending on how much you're leveraging, you can get really emotional about it. Then you can jump straight into another trade that you don't really think about, but because you're emotional, you want to just jump straight in and get into it. It can lead to very, very costly mistakes. The other thing that I learned in this week of trading is that this is definitely not a way to develop passive income. So if you're thinking that you're going to be able to build your account up to a certain amount and be able to just make money while you sleep, this is not the way to do it. You have to be on all the time, constantly checking, and you get really absorbed in it, especially at the beginning, because you're excited about it. Your emotions are into it. That really leads to a very time-intensive process to really see those trades go well. So don't think that this is something you could do for 5 minutes a day, 10 minutes a day, and really see returns. This is something you have to line up all the indicators. They have to set you up properly to be able to jump into the market. You really have to watch the market and see when those indicators pop up for you to have all the setup you're looking for and go in. It's not something that is happening just like that. It requires a lot of time to really monitor what's going on. I, for one, am definitely really excited about Forex trading, and I'm very interested in doing some more videos with these types of experiments. If you're interested in this type of content and you want to see another challenge that we could do, leave a comment down below with what you want to see. If you like this video, please hit the like button down below. If you want to see more videos like this, check out that one right there. You're going to like it.